Hello traders, Corey Mitchell here with your weekend stock market outlook for the week of January 16th. Just a reminder, it is a holiday in the US on January 16th, so the US stock market is closed. The Canadian stock market is open. Each week I go through the same process. I look at a stock market outlook based on how the indices are performing, stock market health indicators, recent watch list, and trade performance and sector performance. This is basically the first step in my overall trading process for swing trading stocks. The first part is looking at overall market conditions. Do I even want to be placing trades? If it's good enough, then I start looking at individual stocks. I look for patterns in those stocks and then individual trade triggers. So there's articles on each of those in the article, but this is what we are focusing on in this article, or in this video, the first step. So heading into the week of January 16th, conditions are good. I will be continuing to add long positions this week, assuming conditions stay favorable, and I see some setups I like. I did briefly look at the watch list, and I'm seeing some stocks that I like out there, so more than likely I'll be adding at least one position or two positions. Some of my positions recently hit target, so I'm looking to redeploy that capital. These are watch lists you can check out. Most recent stock watch list, this was updated last week. Still some names on it. A lot of them have taken off and run already. So I will be updating that list early in the week. And then there's also the best swing trading stocks is just a list of strong stocks. I'll also be updating that one because there's a lot more on it now. This I think had 44 on it. We're up to about 120 when I ran the scan the other day. So I'll be updating that shortly as well. When we look at the overall sectors, this just gives you a snapshot of a few. We'll zoom in a second. But we have the NASDAQ 100, the S&P 500, the NYSE Composite, and the Russell 2000. These all just look at a bit different segment of the market, and it gives us a broad sense of how the overall stock market is doing. And then I also have the Canadian index in there. Just for fun, the India ETF or India exchange have been doing really well. It's tapered off a bit, but I had that on there. This week I also threw in gold and oil. So we'll zoom in on those in just a second. Let's look at them now. So from a price action perspective, we can see NASDAQ a little stuck. So I'd say overall, price action on the indices is a bit of a mixed bag in that we don't have them all moving with great enthusiasm to the upside. NASDAQ a little bit stuck, but at least it's moving up right now. We're potentially moving up toward the highs of this sideways chop we've been in. Same with the S&P 500. We're below the recent highs, but right now we're moving up. We'd had a strong uptrend prior to that. TSX Composite heading back toward its highs. The Russell 2000, which is smaller stocks, also getting very close to those recent swing highs. Very strong surge recently. NYSE Composite, no real question, it's in a short-term uptrend right now. Made a higher swing high here. We can see it moved above these prior levels, continuing on from this recent move. The NYSE Composite is also the broadest measure of all these indexes. It includes just all the stocks listed on the NYSE, which includes all different types of sectors, different sizes. So it's a very broad measure of what kind of the average stock is doing, whereas all these other ones are a little bit more specific. I also like seeing that the Russell 2000 is strong because it's smaller companies, a little bit more speculative companies. If there's enough buying interest and money coming into the market to push the Russell 2000 up, that shows that these people are willing to even buy more smaller and more speculative companies. So that's a good thing. Not much to say about Canada. It's doing pretty good, partially due to lots of gold stocks. Gold has been absolutely ripping. Oil still in its downtrend, kind of leveling off a bit. Not too much of interest there. But I just threw these up because if you're a gold bug and interested in gold stocks have been doing quite well. Also the ETFs like GDX, which looks at the miners. So that's basically what was discussed here. We're seeing not all of them are in confirmed uptrends at the moment, but at least we're moving up right now, and our health indicators, which we're going to talk about next, are in good shape. So that just means I'm willing to deploy capital. 76% of all stocks are above their 50-day moving average. If we zoom in on this chart, I have a few indicators on here. These are not measuring the price action of the S&P. They're actually looking at different measures outside of the S&P. I just have them on an S&P 500 chart. So we can see we've had these periods of dropping and then rallying. Also from a price action perspective, let's go back to that. This will be an interesting point. We've had these started to drop again, and then we get these little rallies like what we're in, but they've all failed quite quickly. If we go back here, same thing here. We had a strong rally like what we had recently, and there, and then we started to drop again, and we tried to peek our head back up, and then we got smacked back down. So this will be an interesting point here. If we can continue higher, that would be a very good sign. We have not done that yet in this decline. So if we can start peeking our head above these prior highs, we have not had that before during this decline, at least not as I see it in that context. So that'd be a very good thing. On to the indicators. This is how many stocks are above their 50-day moving average. 76% of S&P 500 stocks, 72% of all stocks in the US are above their 50-day moving average. That means lots of stocks in short-term uptrends. That means it's going to be easier to make money on the long side. When we are below this, you generally have choppy price action or downward price action. It's going to be a lot tougher to make money on the long side. So that's good. Volume, not super important at the moment. This is the daily movement or rate of change each day in percent. And uptrends are classified more by this type of movement. We don't have the big spikes down. We don't have big drops of 2% or more. We're kind of moving up 0.5%, maybe moving down 0.5%, moving up 1%. The percentages are smaller, daily movement. We're starting to get that a little bit. We still have some of these spikes, especially on the upside, but at least they're to the upside. We haven't had a downward spike of a 2% drop or more in a day, within a day. We haven't had one of those in a month. So that's good. You can see we're starting to get a little less volatility, and that's more indicative of an uptrending behavior. So at least at the moment, that's good. That could change at any time. We could get a drop, but smaller volatility is more of a sign of an uptrend. Our NYSE Advanced Decline line, this is stocks moving higher versus stocks moving lower on the day, and it's a cumulative index. Very good. This also has a positive divergence. So we've been moving up, and a positive divergence is this indicator has made a higher swing high before the S&P. So if we look back to December, the NYSE Advanced Decline line has moved above all levels from December. It's at its highest level, and it's moved above the December highs. We can see the S&P's December highs are up here. It's still working toward them. The fact that this has blown through it is usually a sign of widespread market strength. As I talked, the NYSE is one of the broadest measures we look at. It's not 100%, but it's not too far off that the price, when it does this, will often make a higher swing high in the S&P. So this is very good for indicating that the price will probably attempt to make a new swing high. What it does after that, we don't know. But at least for the short term, this is very bullish for the S&P to potentially get back up into this 42, 4100 area. This is daily upward movement divided upward volume divided by total volume. It's looking at stocks that moved up on the day, what was their volume divided by total volume of stocks. And nothing of interest here. We did have a 90% upside day back in early January, and those are important levels, 90% or 10%. 90% means 90% of the volume that occurred on the stock exchange that day occurred in stocks that moved up. That's a rare figure, and it shows very strong buying, and that is bullish. If you have 10% of volume occurring in stocks that moved up, that means almost no one was buying. Everything was dropping. Very little volume occurred in stocks that moved up. That's a bad thing. That's more indicative of bear market downtrend behavior. So we haven't had any 10% days in a long time, and we have had 90% upside days. So that's also good. So these health indicators, all very positive right now, and pointing to, at least for now, that I can be buying stocks. Let's look at the sectors on the move. Oh, one more thing. Another indicator I look at, which we can't really tell based on a chart, is how many quality setups are we seeing and how have those trades performed. And recent trades have been working out very well. I've had some hit targets, and I'm also seeing powerful movement coming out of these stocks that are on the watch list. So I can't really ask for anything more than that. Seeing great price action from the stocks I'm looking at. So that's positive as well. Tells me, yeah, if I can deploy some capital, I will. Sectors on the move. Pretty much everything moving up this week. Healthcare, I did notice, is a little weaker. I do have one healthcare stock still. And it was kind of flat this week when, everything else was moving up. So healthcare, a bit dismal this week. A few of these other ones, healthcare losing ground over the last month. So maybe I dropped that one off. I still have it in these tops. These are the ones that are basic materials, industrials, financial, and healthcare. These are the ones that have just been strong for like months now. So I left it the same just because, we are getting a rotation, and this is kind of the first week I've seen some of these drop into the lower portion on, a few of these. So they're all still holding up well on the 3-month, but on the 1 month and 1 week, some of these are losing a bit of ground. But I thought I'd just kind of leave them as they are, see how one more week goes. But you definitely could look at some of these other ones like consumer cyclicals, top for 1 week, definitely doing well on the 1 month, moving up there. Real estate also toward the middle of the pack on the 1 month, doing pretty well on the 1 week. So some of these other sectors are starting to emerge, and that will happen. The nice thing is that pretty much everything is doing well at the moment. So that's the real focus, I think, this week for me, is that we saw strength in a lot of things, and to me that's very encouraging. So again, this doesn't have to be anything that you particularly use. You don't have to focus on one sector or anything that. I scan all stocks. I don't scan for sectors. But if you are a little pressed for time, then you could maybe scan within individual sectors that are doing quite well, just to find some stocks in there, potentially get some trades. If you don't have time to scan through, 200 or 300 stocks, like how I teach in the Complete Method Stock Swing Trading course. And I do that about once a week, scan through the list. And then it'll be updated in the watch list. So finally, what will I be doing? Well, I will be adding some positions, hopefully, if I see some good setups and they actually trigger. So that's what I'll be doing this week. Of course, I always day trade. You can check out my day trading methods in stocks or the Euro USD, whichever one you're interested in. So that is your stock market outlook heading into the week of January 16th. If you're in the US, enjoy your holiday on Monday. And until next time, happy trading.